Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 5th of March, 2020. Just like Don said yesterday, is it safe to come back in the market? Depends if you're a bull or a bear. If you're a bull, not today. So what we're going to do in tonight's video is not only take a quick overview of the market, which is S&P at least down 3%, Nasdaq almost 3%, Dow and the Russell also 3%. Weakest sectors of the day includes financials, that's not bullish, which are also at the session lows, there's 26 or swing lows of the year, and industrials off as well. And the strongest market, if you can call it that, they include utilities, XLU, that got a bounce, played up off our support levels, but also staples. And to see these two markets, staples and utilities, those can be seen as consumer defensive or risk-off type of sectors. If we're seeing money flow strongly here, that's a sign of bearish things to come. If you're seeing the strongest or the greatest weakness of the market, the most money flowing out of the equity market in terms of sectors in financials and technology and discretionary and industrials, but also throw in materials and energy, well, that's not a good thing too. So a quick overview. It highlights those components of risk-off type of behavior, and note that the market right now holds 3,000 in the S&P futures. Taking a look inside of our weekly expected move type of grids, we were outside, but we're back in. So these yellow or these green, white, and red lines reflect weekly expected moves. Way more times than not, the market stays within them, but sometimes when the market goes wild, if you break and close firmly outside, there actually is a gravitational pull outside the weekly expected move. And that was the case in spades last week. So we have a wider expected move for this week than to Friday, but we're underneath that pivot. So that's what we're watching in terms of the next session, and as these levels get updated and printed on Monday. But before we get there, in the past, in prior videos, I've done stocks making new 52-week highs, stocks joining the market at new 52-week highs. And that worked out for months and months and months and months and months, mainly playing in-out spreads or vertical spreads on bullish stocks that are stronger than the equity market and expected to get even stronger. Many names, including Southern Company, is a utility. So it stayed strong and got remarkably stronger in early 2019. So that's how we typically would do the swing or vertical spreads or little duration plays into strong stocks getting stronger, filtered out by relative strength, or in the easiest way to do it, stocks making new 52-week highs continually. Let's flip the perspective on its head. Now, let's take a look at stocks, and we can see sectors as well. We don't want to see financials, but we are. These are stocks in the S&P 500 that are making new yearly lows, or 52-week lows, technically. Low of the last year, 252 trading sessions. It's the exact opposite of the strong stocks getting stronger. These can be seen as weak stocks getting weaker. Right now, we have 80 of them. And if we sort them, this is by, let's do a sort by market cap. So on the top of the page, the market caps that lead the way down include Wells Fargo, Oracle, Boeing, U.S. Bank Corp, and others which are financials. And you can see financials spread alongside discretionary. We can also look at it this way, which is not so much by the market cap, but by the sector. So energy, there's a concentration of energy stocks making new 52-week lows. Materials and industrials. Discretionary, this is what you would expect to see. Look at some of these. Wynn Resorts. Don's been talking about this with us as well. MGM, casinos. But have we heard a few news? We certainly have headlines about cruise ships. That includes Norwegian Cruise Line, Royal Caribbean, Carnival, and some others. But also retail names including Gap, Kohl's, Macy's, and travel company Expedia. So these play into it as well. Advanced Auto Parts too. Strange to see Dollar Tree, but there it is on the retail spending side. Again, financials make the bulk or make a large part of these lists, and these are stocks in the S&P 500, so you might not be familiar with some of them, but they are there for your ability to scan and take a little deeper look if you want to put spreads or trades on. We'll go through some charts in a moment. Information technology, consumer services or communication services, and a little real estate, some hotels and others. So from this is a broad watch list, and you can sort by whatever component you would like. Volume, ADX, market cap, days until earnings. Many, many ways to sort this scan list. But let me take you through we'll just kind of look at these quickly on a new yearly low scan list. So this way I've sorted the top holdings by percent function or percent loss in today's session. Some of the names will be familiar. Some of them make perfect sense, given that coronavirus is affecting cruise ships, affecting travel, airline companies, and some retail names, casinos, or general travel stocks, travel-related companies or industries. The biggest losers of today, and that's just by percent change, include Royal Caribbean. This is so much of a fall, much of a drop on the daily charts that it may take a weekly perspective to get this within a larger context. So Royal Caribbean, going back, let's go back 10 years. On the weekly chart, this really last couple of months, honestly, has taken the stock back to where it was for stable price levels in 2016. Now that is a support level, but I don't think we're looking for main technical analysis within these type of components. It's just more of a factor of news affecting the tape, news affecting stocks, news sending stocks into a route. And again, the heart of this virus, and there's multiple ways to look at this from the stock perspective, but one of the avenues, as Don mentions in his sessions too, are these cruise ship. And he's even saying some of these might not survive if this continues to get worse, if their business and cancellations and bookings or cruise ships are grounded or prevented from landing on shore or quarantined, the stocks could fall even farther. So this is a news. It's not really a chart or even volatility play. It's just sort of, these are headline front news focus. There's American Airlines. We've discussed this. We actually had a reasonable support play, little flag trades and bear trades in American Airlines, and some little bull calls or bull positions off of 25. Well, that's out the window because that broke support and has fallen precipitously. And it's okay to get, you typically expect to get large outsized percent moves on smaller or lower price stocks, but still that is dramatic even by those standards. Norwegian Cruise Lines, 60, we were in a large trading range before the virus outbreak from 60 to about 46. So that led for in-out spreads or duration positions or low volatility captures from the support to the high and then back and forth. Well, that's out the window because the cruise ship its company at least, has taken a hit news-wise. And well, just a few more. United Airlines, same. And Alaska Airlines, same. MGM Resorts, Vegas and some other casinos, and others. Also hotels, Wynn particularly, and we again not down the whole list. If we look at this from a market cap perspective, as we saw earlier, market cap stocks would include Wells Fargo. These are the ones that are the biggest, or stocks making new 52-week lows. That's where this list is. So Wells Fargo, that's how it's showing up, is making not only a new 52-week low, which was over here, Wells Fargo is making a low in price not seen since 2013. Oracle, not as dramatic. Boeing, we talk about Boeing a lot. That was a large-scale rectangle, large-scale support shelf, or ways to sell premium at the edge. If you sell above or sell beneath, you sell above, sell beneath, even doing condor type of trades. That's out the window too, with volatility selling and volatility expanding, and Boeing and other stocks, companies, breaking out of well-defined trading ranges. So that's part of it as well. And just a few more. U.S. Bancorp, other financial companies, PNC, there's Schwab, MetLife, Simon Property Group, and we'll maybe end with AIG, FedEx, and some others, Prudential and Aflac, which are insurance companies. So it's mainly a kind of a top-level view into individual companies of what's going on beneath the scenes and why you're seeing these big moves and how the virus or how the virus news is affecting particularly consumer discretionary stocks. So we're always going to watch these. There are opportunities. We prefer calmer markets and calmer type of trades. So this is a high volatility, high risk situation. Spreads are where you're going to manage those risks if you do take positions. But keep watching these names, and the concept remains that which is weak tends to get weaker, and that gives us some advantages for intraday and swing trades. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for March 5th, 2020.